Absolutely. We think this is, again, in NVIDIA style, is going to be another significant beat and raise. The demand signals from their top four cloud service providers and hyperscalers have continued to increase. We heard them during their Q3 earnings calls, and their Q3 capex results prove that there is no slowing down in demand. But more importantly, we think the demand beyond these top four guys, which is the tier two cloud providers, which is the enterprises, sovereign wealth, has also continued to pick up. So we again expect a splendid beat and raise.
A pickup, and how long is that sustainable for, from your own projections?
I mean, that's the big question that everyone's trying to figure out. And, until we don't see significant signs of slowing down, I think the obvious answer is that it will continue. Again, that's why the Q3 commentary from these guys was very important. I think it looks like, from what we've heard from channel checks, 2025 demand for Blackwell and the backlog is sort of in the bag. So now the next question we're trying to figure out, how will 2026 look like?
Good, John. When it comes
Over the previous week, Nvidia's stock price increased marginally from $138 to $142, which is a significant change for a typically volatile stock. We'll discuss what the street has been saying about Nvidia stock in this post. According to Aswaf Damodaran, a professor of finance at NYU Stern School of Business, Nvidia is overpriced. He expressed his viewpoint while interacting with CNBC journalists and remarked, "If you're purchasing at this price, I believe you're anticipating a far larger market for goods and services than most people realize. You must be explicit that this is the basis for your purchase." You still can't defend a $144 valuation without something else occurring, even if you assume that Nvidia will continue to maintain these really high margins and dominate the AI chip market, which I think they currently do. It's nearly like you're placing a wager on Nvidia discovering and controlling a new market, which is a difficult decision. Similar to Damodaran, Trefis Team, an investment advisory firm, believes that Nvidia's stock is overpriced given that it is now trading at 48 times fiscal 2025 earnings expectations. The company thinks that for investors who wish to join the AI trend, rival chipmaker AMD provides a more alluring entry point at 28 times forward earnings forecasts. Although some believe the present price is unjustified, Saxo Bank, based in Denmark, believes that by the end of 2025, Nvidia's stock might reach $250. According to chief macro strategist John J. Hardy, it would give it a market capitalization of $7 trillion. He anticipates Nvidia holding 10% of the global equities market in the upcoming year and believes it is the main shovel seller in the AI gold rush. The analysts at Phillip Capital, who are not as enthusiastic as Hardy, recently downgraded the company from buy to accumulate and increased the price target for Nvidia shares from $155 to $160, according to Yik Ban Chong, an analyst at Phillip Capital. Sales of the H200 Hopper reached double-digit billions, the quickest product ramp in the company's history, and Nvidia stated that its demand will last at least until 2H26. Hyperscalers are also improving their AI cloud capabilities in order to take advantage of cloud service prospects from Gen AI entrepreneurs. Furthermore, Chong also noted the possible effects on Nvidia's stock of increased trade tariffs between the United States and China. Nvidia's stock price dropped more than 50% from its peak in October 2018 due to the intensification of the U.S.-China trade war, which began in July 2018. The share price of Nvidia might be significantly impacted if such tariff policies were to be implemented once more. Nvidia may face difficulties as a result of increased trade tariffs, but what about a fundamental shift in AI? Barron's reporter Adam Clark offered a distinctive viewpoint on a paradigm shift in AI that might have an effect on Wall Street's AI darlings' operations. Large model development and training are becoming less important to AI companies in favor of inferencing. According to Clark, Nvidia's GPUs are better suited for the training phase of model creation, and inferencing might increase sales for the company's rivals, AMD and Intel. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication. So if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on NVIDIA stock in the comments. Your support truly helps us grow. Now, let's get back to the video.
The concerns surrounding Blackwell, a lot of that was resolved last quarter, like you were saying. When it comes to, again, I guess those demand expectations for 2025, what do you think is realistic here coming from the street?
I mean, yeah, look, there were a lot of concerns, and obviously, they're moving from the chip supplier to an entire system rack supplier now. So you do expect some hiccups. The one thing people forget is there are a lot of configurations. So just a concern on the, let's say, for example, the liquid cooling thermal side does not stop them from shipping in drop-in cards, or does not stop them from shipping in the air-cooled version. So we think the different configs will start layering in 2025, and most of the NVL72 liquid cooled, the massive racks are going to ship a lot more in the second half.
Does NVIDIA...
Here, the research director also discussed his thoughts on NVIDIA's financial performance. He believes that in 3 months, NVIDIA's stock might hit $170. Although we see NVIDIA's potential as an investment, we are convinced that some AI stocks have a better chance of producing larger returns in a shorter amount of time. Check out our research on the cheapest AI stocks if you're searching for a more promising AI stock than NVIDIA that is trading at less than 5 times its earnings. Both NVIDIA's and Advanced Micro Devices value propositions have been significantly impacted by artificial intelligence, AI. As consumers race to take advantage of AI's potential, NVIDIA's AI accelerators have completely changed both the business and the semiconductor sector as a whole. AMD, on the other hand, has a reputation for technologically catching up to its rivals, and it is making another attempt to do so in the market for AI accelerators. The future can be bright for both businesses. Through 2030, Grand View Research projects a 29% compound annual growth rate, CAGR, for the worldwide AI chip market. With such growth rates, all of the key companies in the business should benefit from a rising tide. However, since both stocks have profited from significant AI-driven growth, the outlook for investors is less certain. However, considering the current positions of both equities, one is probably going to do better for the near future. Since investors learned that ChatGPT's AI platform was driven by NVIDIA's AI accelerators, the company's stock has soared. Due to the extraordinary demand for their accelerators sparked by this revelation, NVIDIA was unable to manufacture enough of these processors. As a result, NVIDIA's primary focus is now on the data center market that creates these chips. NVIDIA has just started releasing its newest Blackwell accelerators as part of its ongoing innovation strategy to remain ahead of rivals. Many reports claim that they cost between $30,000 and $40,000 per unit, with the Blackwell superchip costing up to $70,000. Despite these costs, Mizuho Securities predicts that NVIDIA has between 70% and 95% of the market for AI accelerators. To stay informed about the latest developments from NVIDIA and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts. So hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on NVIDIA stock, so please share your opinions in the comments below. Now let's dive into today's video.
Yeah, seem like it has enough of the natural resources for not just the design, but also to make sure that within the design, there's the fabrication build out that's meeting demand as well, because that's where it seems like some of the other players are really relying on the ability for some of the chips to fall off of NVIDIA's plate and onto some of the other competitors.
I mean, definitely, look, they have the first mover advantage in this specific arena, and they have been consistently at least 18 months ahead. So these sort of slowdowns does provide some kind of air pocket for others to catch up. But having said that, still the dates we are hearing, which is first half and really second half ramp, we don't think anyone else can catch up to their most superior performing solutions, which is the NVL72. And like them, most of the other players are also faced by supply constraints when you think of these leading edge nodes, very advanced packaging, GPUs that they're trying to sell.
As a result, investors won't be surprised when NVIDIA announced $91 billion in sales for the first 3 quarters of fiscal 2025, a 135% annual growth. $80 billion, or 87% of total sales, came from Nvidia's data center division, which 3 years earlier was not even the company's biggest source of income. Given that the $51 billion profit for the first 9 months of fiscal 2025 increased 190%, the expansion has had an even greater impact on net income. Regretfully, Nvidia's stock probably prices in this growth, and then some, for investors. The P/E ratio of 55 is not the cause of that. Nevertheless, given Nvidia's price-to-sales P/S ratio of 31, investors might be hesitant despite the growth. Even for a rapidly expanding stock, that is a high number, especially considering that revenue growth is predicted to drop to 51% in fiscal 2026. Stocks with slower revenue growth are typically punished by investors, which might be bad news for Nvidia's shares. In fact, Nvidia's difficulties might encourage investors to consider AMD a new rival. Nvidia's hegemony in that area prompted AMD to start offering its MI300 family of accelerators. In an effort to compete with Nvidia's Blackwell line, it also introduced the MI325X accelerators in October. The amount of business AMD can steal from Nvidia is unknown. But AMD's financial performance is also inferior than Nvidia's. Its $18 billion in revenue for the first 9 months of 2024 increased by just 10% over the same time in 2023. Furthermore, just 48% of income comes from the data center category. Despite a 107% growth in revenue over the previous year, that division's still behind Nvidia. However, if data center income also emerges as AMD's primary revenue source, it might potentially indicate more growth possibilities. Even though AMD's $1.2 billion net income increased more than sixfold annually in the first 3 quarters of 2024, the company is still far less profitable. Its 128 P/E ratio probably does not accurately reflect its valuation during that profit recovery. Although Nvidia has a larger market share, its projected 51% revenue growth is still much greater than AMD's 27% growth, even assuming both revenue projections come to pass. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.